now. Okay. Hello, everybody. Welcome back to episode 10, Sofi. Thank you guys for imitating me. That was unnecessary, but that's okay. Sofi Weekly, here we go. It is another week. We were talking about Sofi. We are sorry we couldn't come last night on Friday nights. We had to do it Saturday, but usually every week we will be Friday nights. But we are here Saturday, December 10th, 10 p.m. And we're going to talk about Sofi. First of all, how are you guys doing this week? How's your week?
Pretty good. When I had the best barbecue in Texas this morning.
Okay. It's pretty good. Tevis, how about you?
I'm doing great, man. No complaints on my end.
Okay. Tanner, how's your life?
Things are great, dude. Things are great.
Do you want to tell us why you're wearing this?
Is
you
going
want to tell us why you're wearing this outfit?
Little Christmas party and little dinner with the wifey.
Yeah, Tanner and I were out. We just came back for this fucking podcast. You nerds don't have plans on Saturday.
You and Tanner were actually enjoying your Saturday, and then you're like, "Oh shit! Wait, we have to do a podcast at 10 p.m." We had a big day.
Yeah. If only we had scheduled this for Friday.
Yeah.
Only. Okay. So let's get into some news this week. I think the first thing we'll riff on is some of the stuff, which is the title of this pod, that Anthony Noto has been tweeting at with Greta Traderberg. And then we'll get into some other stuff. So she tweets on December 7th. The reason Anthony Noto brought millions of SoFi shares several months ago was for the SBC and RS approval vote. It didn't matter if shareholders voted against the reverse split. Noto had the controlling vote all along. Extremely grimy move, meaning he kept buying hundreds of thousands of dollars worth of shares a couple months ago because he wanted extra voting control. At least that's the acquisition from Greta. He replies, "Once you start lying about facts on things that are disclosed, I feel compelled to correct you. You are now spreading lies. I didn't control the vote. There is only one class of shares I own, a very small percentage. The amount I bought barely increased my ownership." And then someone says, "Wait, so is this a real response for all the hit pieces on SoFi attacks from legacy banks, politicians, regulators, Noto's former employer, and everyone else? This is the thing that gets a passionate response. I don't need an Elon, but why is this response?" Basically saying, how come you're not responding to other concerns shareholders have? And he says, "Everyone is entitled to their opinion, not my place to debate their view. We say what we will do and we work our butts off to do it," which I would tend to agree. "We don't always win on the long road, but we travel as long as you can take it to the bank that we will die trying to win. Lies about facts I will correct."
Boom.
Preach.
Damn.
Pretty spicy back and forth that Noto had. So let's start off with you, Riley. What was your first reaction to seeing this exchange?
Well, I just gotta say, fuck Greta Traderberg. This is a troll. This came out of nowhere because every month Greta Traderberg, she switches her position on SoFi just to get a response out of people. I've actually messaged her quite a few times, and she jokes about it on purpose. So I'll call her out right there. But it is kind of funny to see Noto passionately defend his stance on the company from a bogus claim like this.
Here, let me go ahead and share my screen really quickly just so I can show you guys. This is Anthony Noto's purchases, at least for this year for the most part. If I'm missing one, I haven't updated this in a little while, but I know he hasn't been buying for the last couple of months. But pretty much what I wanted to show you is that all these purchases that he has made throughout the year has changed his ownership by about 16.2%. Okay, so he's not doubling, he's not quadrupling his ownership. He did add a decent amount, but it's not like this crazy theory that Greta had supposedly thought of, that he's buying ownership of like this crazy amount. I mean, he owns $15 million of the stock, like in this multi-billion-dollar company. He doesn't have the majority voting right that enough to take over the reverse stock split, But yeah, that's pretty much it.
Tevis, your thoughts on any of this?
Yeah, I mean, overarchingly, I didn't love the fact that Anthony Noto responded, especially because it sounded pretty like Greta, definitely struck a nerve, and it was very clear that the emotional response from Noto was provoked. Which, I mean, I get that he's standing his ground and kudos to that. But at the same time, I mean, if you have a CEO just responding to trolls on Twitter, it just doesn't set a great precedent for back and forth. Trolls they have a job to do, and they're going to do that job regardless.
Tevis, do you think this is going to be a problem when like SoFi is a huge company? Like when we're a huge bank, do you think having a CEO that tweets a lot is bad?
No, I mean, I think Elon has broken that mold of just being like smoking weed on podcasts, and it's fine. But at the same time, I mean, like the board holds the CEO accountable for the shit that he says and does, right? And so, I think that if he had I would have loved to see him respond to some like legitimate article or hit piece or whatever, or something like Morgan Stanley sold or lowered their price target, not to Greta. Like it seems that like such an insignificant thing to respond to. If it's a one-off thing and Greta struck a nerve, then that's fine. But if it's something that like Noto takes to Twitter consistently to respond to trolls, then I just hope he's careful about how he goes about that, because everything that he says and does is going to be scrutinized by shareholders.
Well, it's very much an Elon thing to do, right? Is just sort of respond to the average person on Twitter instead of just talking with the analysts all the time. And I think I don't know. I definitely wasn't bothered by it. He said, you know what? I see your tweets every now and then and I ignore them, but this is like just now you're just spreading lies. And I hope he doesn't continue to do that. I think, I'm definitely not super mad at this Greta person either. I mean, they had a theory. They should have looked into it more, but I've seen this person post both ways of the argument. And I couldn't care less. I mean, I don't know.
I am kind of concerned though, like in the long term, just because how easy it is for like one tweet can get you canceled nowadays. Like if you just make one mistake, that it could be held against you pretty quickly. And Noto's fierce has like a really strong principle of what he thinks is like right. And sometimes like he's not afraid to shout it on the mountaintop. So I don't know, maybe this is like a bad thing, but I think it is a positive, like having a leader that will clearly tell you when you're fucking up and clearly just like lay out the rules of the land. But I don't know. It's something I don't know what's going to happen in 5 years when SoFi is like super big and you have a leader that's really outspoken, because I can't tell you the CEOs of any other bank, they keep their head low.
What, that don't keep their head low?
No, I think a lot of other CEOs are a little bit more apprehensive than shouting on the rooftop.
Jamie Dimon says some wild shit though.
Yeah, I was gonna say Jamie Dimon's pretty crazy. What's the
Goldman Sachs dude is DJing all the time and shit.
Who's
really?
what's
David Solomon?
I mean, isn't David Solomon like a DJ in his part time? Like
that's great.
I'm not even joking.
I think I read some article about him taking the company jet to go over to like Lollapalooza or something like that for his DJing event. Don't hold me accountable to that. Maybe I'm making stuff up. But
when you're a CEO of the company, like you can justify doing anything because if the company does moderately good for a year, like you get all the praise. Obviously, if it sucks, you get all the blame. But there's so many things you can do when you're the CEO because like you're the guy or girl.
Yeah, I'm gonna hard disagree on that. Like you have to be accountable to a board. And the board can just be like some major shareholders who just don't like the fact that you're not conservative as a CEO and you're vocal, and that can just get you into hot water so much faster than any other position, because like there's way more pressure on you and everything you do and say can be scrutinized, right? So that's just my stance. But
the only pushback against that I have is it's really hard to replace a CEO, especially if they're like a good CEO. Like look at the Elons. I know Elon's one of a kind, but even Adam Newman, bro, Adam Newman had to collapse an entire company to nothing before they finally ousted him. Like when you're the CEO and you're the guy or girl that got it from 0 to 1, you can get away with a lot of shit.
The difference was Adam Newman was a founder. Noto isn't.
I agree.
However, the SoFi's board of directors all love Noto to death. He's even interviewed some of them on his podcasts, like Magdalena Yasil, which used to work at AMD back in like the early 2000s. And dude, all of them love him. So I don't know. It would be impossible to replace Noto. I don't see how that like would even work. I would just be so demoralized.
Well, let's respond in real time to the fact that this podcast is a 0 out of 10. Forgive me, but this conversation sucks. Who cares about a CEO responding to a tweet? Well, we care, so that's why we talked about it. But having said that, we should probably move on now. It's like, yeah, well, okay, it's time to move on. SoFi launches a spend better, or to launch a spend better in 2023 on shopping portals. Riley, you want to give us the go-to on what this is about?
Yeah, this is like super simple stuff. It's just gonna one. It's a win-win-win for everybody. Basically, if you have Capital One or any of these other banking apps, you'll see a lot of like, if you use your debit card, your banking debit card, there's a lot of partnerships, like affiliate kind of program type of stuffs, where if like you spend at a certain location, you'll get like discounts. So SoFi is building this in-app, making their offering a little bit more enticing. I'm not sure how big of a tech like news this is. All I could say is it's good, and you're going to have more value as a SoFi user. SoFi is going to be making more money.
So they're going to let you shop on the app? Is that what this is?
No. So like it's basically saying like if you use your SoFi credit card or your SoFi debit card at these locations, you will get a certain discount. So it incentivizes SoFi users to spend money at certain places. And if SoFi users do spend money at that places, the places will give money to SoFi for like an affiliate, just being able to get their users members to actually spend at that location. So it's just like a lot of banks have this, but however, I think they're going to try to do it their own way and do something a little different, because a lot of these like Capital One and all these other Bank of America apps, they all have like just like super, I don't know. It just seems stale. Like it doesn't seem cool. Hopefully SoFi does something fun with it, but it's just another product on the 2023 roadmap that we're going to be keeping our eye on.
Well, it's already started to launch, right? Is the shop local button. That's pretty much what the spend better sort of thing is. And so there's a company that I use in Canada. I don't know if you guys can see that, Neo Financial or whatever. Pretty much this is what they do. It's just different cashbacks based on local places that you might be able to go to, right? So the idea is that they go to those merchants. They say, hey, if you shop with us, you might have a higher conversion rate if you say, you can use a SoFi credit card and offer a rate, as a cash back. So it's not that SoFi is setting up these 4% cashbacks or 5% cashbacks or something by shopping at those stores. It's those stores that are doing that as an incentive for maybe new users that haven't heard of their business before to come into their business, right? So they're able to say, okay, we're a local California jeans company, okay, and the first time that you come in and buy one of our pairs of jeans, we'll give you 10% off. But that's just their commitment to customers that want to choose them, and they're making that deal through SoFi. So, it's sort of a win-win. They get new customers, and then we get to offer our clients a way to be like, hey, look at these high cash backs that you never would have gotten on any other card, right? So it's one of those things where it's a product that I find requires like a large sales team, because you need to find all of these different shop local merchants, but maybe they have some sort of back end, partner that is finding these local deals, and that sort of hasn't been disclosed to us yet. So who knows?
Sorry, I was saying something, but it was muted. I don't know why the thing was muted. I was gonna say, okay, so I want to move on to this topic. Robinhood has launched. Unless Tevis, you had something to say on that. Do you have something to say?
No, I mean, no thoughts. I think like all credit cards basically do the same thing, where they just sell your data and then they get a kickback from the companies on the other side. But I think, SoFi is taking it to another degree with an actual like UI and having their own portal and actually getting some more insights. And I think there is a point to be said on insights, but that's later on down the line, which is why I didn't mention it, where they can have so much more insight in terms of your spending patterns that just builds your user persona even more. And so, like when Riley has mentioned points in the past around like banking of the future, how data is going to be the new gold, then SoFi is just building up all of those different avenues by which to collect more data on the user so as to have more detailed insights later on down the line.
And
yeah, because Go ahead.
Yes, I'm so sorry. The Spin Better, that's also going to be part of SoFi Travel as well, which Tanner, you've hit pretty well on your channel. But like basically all these points that you get from your card and your regular banking account, you can use on travel for discounted travel and like hotels and whatnot. So they're going to like build this whole like ecosystem. Like, I don't know. It's interesting, but they're going to have like, they're going to be able to influence their users to behave in a way that makes them profitable and also give them points to make like use member behavior exactly how they want to be more profitable. I don't know. There's something to be said about that, especially SoFi Travel as well. And I'm really interested in what they do with that.
Isn't a lot of these products just simply, kind of trying to make it all into one big app, right? Like instead of going over to Expedia or something like this, your actual finance services company will be able to handle that for you, right? These types of deals are understood, and we understand the business model of Expedia. We understand the business model of a Groupon or something like this, where we can get higher rates of a discount on maybe shopping at a certain location. And so these new fintech or style banks, right? They're just trying to be able to incorporate all these different things. So like whenever you think of money or spending money, you just have to go to that one location, not have to go to all these different websites to be able to get, that one function that you're looking for. So, not only will it be cool if SoFi gets these products, but it's really what I think is exciting is Galileo offering these products, right? The shop local ideas, the buy now, pay laters, the travel sort of, merchanting ideas, and being able to go, hey, Robinhood, do you want any of these features? Do you guys want any of these features? Chime, do you want to step in? Like, that's really where I think we get into big scale, is offering it to all these people, and they're all, trying to jive for all these different clients and go after all these people. But at the end of the day, we take a cut from all of them. And we just become that back end process like Visa and MasterCard is, but for all, fintechs, hopefully. That is the dream.
Yeah, it makes sense because I use Robinhood's debit card because it's like really smooth. And I bought Dunkin' Donuts, I bought some other random stuff. So they're starting to probably get that data on me. So when they want to offer me like 2%, 3% cash back or something, that data is valuable. And obviously if SoFi goes that route, it's way better than what Bank of America shows me, which is just random like cashback offers of stuff that I don't care about. And if Galileo can offer that data personalization on the banking infrastructure level to these types of apps that you mentioned, that would also be pretty legit, which I think brings us into our next topic about me being that number 6992 on Robinhood's Roth IRA list product, which is really
that
cool.
Was not the transition at all, man. You should have transitioned to Galileo offering buy now, pay later. What are you doing?
Okay, we can go to that. I was talking about Rob. Okay, let's go to the buy now, pay later.
What are you doing?
Yo, how much is Robinhood paying you, man?
Bro,
you plug their debit card, you're plugging.
I can't wait for this, Rob. It's so crazy because I'm long SoFi. I don't own a single share of Robinhood, but the app is just so good. It's just so good. Okay. Galileo buy now, pay later for B2B. We had a debate a couple of weeks ago on the merits of buy now, pay later. Now it's in the B2B space. Who wants to take the first dig at this one?
If someone wants to explain it, I've got some more things that maybe not a lot of people have been thinking about, but if someone wants to set it up, that would be great.
I'll set it up here real quick. So like right now, buy now, pay later as of July is growing at an annual, I think the CAGR is like 45%. So it's growing. No banks offer it. So basically what Galileo is doing is they're offering the B2B buy now, pay later solution, and it's customizable. So if you want to implement it into your bank, you don't have to buy SoFi's major big platform. We will give you that buy now, pay later API so you can implement it into your bank. And then hopefully by 2025, Galileo gets a ton of new banking partners, and that will be a wedge for us to offer other stuff to them in the future. That's my take on it. It is a huge TAM right now, and like it's completely untapped. So it's coming, and the buy now, pay later wave is going to be here before we know it. And no banks are equipped to like offer this solution, and SoFi should be able to offer that pretty soon. Well, actually, it looks like they're rolling it out now. So
So just to give you guys a couple of little facts here, okay? Now, there's a big difference between an Afterpay or an Affirm and what Galileo is offering, okay? Now, if SoFi is going after buy now, pay later, then this comment here, buy now, pay never, makes sense, okay? Like that sort of idea is quite funny, but let's actually get into the Galileo side of it. Galileo is not this sort of, buy now, pay never, because we don't take on any of the risk. We're just offering businesses the opportunity to take that risk. Okay. So we get paid regardless. So
well, what's the distinction between that? What do you mean by we're offering businesses the opportunity, but we don't have that risk?
So we're offering the businesses to be able to take a loan from one of their customers, right? To take on a loan, not from their customers, but to give out a loan to their customers. They are going to be responsible for the benefits of those, the interest rates or whatever from the client, as well as, the risks that might come if they default on that, loan. A buy now, pay later product, even if it's $50, is a small loan. You're lending out the money and you're hoping they pay you back eventually. So there is definite risk, okay? But Galileo's product is just saying, hey, we'll give this to you and we'll let you take the risk, but we just want our little cut of the transaction fees. And that's what I think is quite interesting, because we take none of the risk, but yet we offer the solution. The same way that, a sales force doesn't care if you get your business off the ground. You're still paying them your monthly fees, but they're offering you that solution.
Yeah. In other words, put differently, if you think of buy now, pay later as both a B2B and B2C, you'd rather have the other business accountable to pay you than any individual consumer who can just default on that loan, right? And so buy now, pay later, introducing it through Galileo to other businesses first is definitely the safe route to go, as opposed to the SoFi branded buy now, pay later option that's B2C.
And like Riley said, this is even if, these businesses do get into this product, it is going to be quite popular, and that's going to bode well for Galileo. So the buy now, pay later industry is forecasted to surpass 900 million global users by 2027. So in 5 years, 900 million users. That doesn't mean we're going to get 900 million users. We're not going to get nearly as many as Affirm or Afterpay, but we hopefully will be a percentage of that market.
I think we will, though. Afterpay, Affirm, all these companies have way much more, they have so much more risk than banks do if the banks offer the buy now, pay later option, because the banks can see your cash flow. And if the banks see your cash flow, they can determine whether or not your credit worthiness is as good. I think SoFi and all these banks offering buy now, pay later, which is going to be the future of buy now, pay later, is going to be way more profitable and way lower risk than what Affirm and Afterpay and all these other buy now, pay later merchants that don't have a banking charter are offering, because they don't have the data. They just have FICO score. And if you plug in through some Plaid, if you plug in some financial institutions, they can pull some data, but it's very, very, very small. So I think buy now, pay later will be a little less risky for institutions, the way that Galileo is offering it, if you have a bank.
Sure. And I mean, even this as a total addressable market right now in 2022, supposedly this is according to Grandview Research, and I can send the link through if you guys want. But the 2022 revenue, there we go. I just sent the link. For 2022 is $6.2 billion. By 2030, it'll be $39.41 billion in buy now, pay later revenue. So it is growing at a good pace. But that being said, that's not even what I want to talk about. What I want to talk about is actually understanding how Galileo benefits from this if someone uses buy now, pay later versus a regular transaction. This is quite cool, because as I was diving into this, if someone were to make a $1,000 transaction on our platform versus a $5 transaction, there's actually a huge difference in right now, there's not a huge difference in how we benefit. We take a fixed cost. So even if there's a $5 transaction or 1,000, it's the same amount that Galileo benefits. So what buy now, pay later does, where we can really benefit, is this breaks us up into 12 or whatever. It could be, flexible on the actual payment amount. But let's say it's 12, monthly payments across an entire year. You're taking $1,000 transaction that could have been one singular amount of transaction cost for Galileo, and you're turning it into 12 separate transactions. That means we take our same similar fixed cost and we divide it, or we times it by 12 different transactions because we take a fixed rate, right? So we're actually 12xing the amount of revenue that we're going to take in from a single transaction on buy now, pay later.
Is this based on is this just based on how many transactions, or like also the price of the product that people are going to be using?
So the price of the product does not matter at all. We take a fixed cost. So if you're buying a car with on credit card that you have that's through Galileo, they are taking their 40 some odd cents or whatever it is. I have estimated based on competitors that it's somewhere between 40 and 45 cents per transaction. But I mean, I don't have that in exact data. That's just going off what the competitors offer. So I'm sure it's going to be somewhere in that range. But if you're dividing it 12 separate times, you're really increasing your margin on a single transaction. That's very cool, Can
we answer this question? Theo says, why would a business take the risk with SoFi when Afterpay, Split It, etc., put the risk on third parties instead?
Well, SoFi, the way that buy now, pay later is going to be here in the next 2 years is that Afterpay has to go to merchants to make a deal with them. But in the future, Visa and MasterCard have already built the rails so that you can use buy now, pay later anywhere without the merchant's consent or even them knowing.
Yeah, that doesn't answer the question, though.
Okay.
So Afterpay or Split It doesn't white label their buy now, pay later to other businesses, right? So
exactly. Not only that, but also you're limited to the merchants that are allowing you to do this. If you do it with a bank and you're willing to take the risk or whatever, I mean, who knows what the risk will actually be. But if you're willing to do that, that's with every single product that MasterCard is able to be transacted at. So the actual amount of products that you're able to use buy now, pay later on get much, much larger. Anything that's above $50 worth of value. And in fact, I just used buy now, pay later like 2 days ago because I was on Amazon and I went to buy this preamp for this new mic that I got, and they wanted like $800 for it. And then up in the top for Amazon was like, oh, do you want to do this at 0% APY and we'll track it for you and make sure that, I was like, okay, well, I'll just keep the money in my pocket and continue to make interest. Like, why would I give them all the money if you're going to offer it to me at 0%?
I would also imagine that if SoFi uses buy now, pay later as a B2C product through Galileo, then they would also have some additional benefits because first of all, they own Galileo. And second of all, I would imagine SoFi's bank charter would also give them some preferential rates in terms of the end rate offered to consumers, or even that stability that other just pure fintechs like Afterpay or Split It wouldn't have altogether. I mean, Tanner or Riley, you can keep me honest on that, but I would imagine both of those things have an effect on the end rate that's offered to consumers, which would be an incremental benefit for SoFi's white label solution as opposed to these other companies.
I'm not understanding quite like the question. I mean, I think Affirm and Afterpay and these sorts of things, I think they have a really, really compelling offer. I do think it's really, really good. I don't know if necessarily we'll have a better product in terms of just, a one-to-one product with them. What I do think is really exciting is that to be a part of buy now, pay later, especially on this banking side, is that you need a bank sponsor. Now, we can definitely really outprice Affirm and these sorts of companies if we say, hey, not only will you need a bank sponsor, we'll be that bank sponsor. We'll give you guys a discount on the products if you use buy now, pay later with us and allow that to be used through Robinhood or some of these things. But that's sort of how I could see it being beneficial.
So instead of it being just a pure like buy now, pay later Affirm, which is what their business model is built around, if it's connected via a bank, that means they don't have to make a deal with Home Depot to offer buy now, pay later.
Exactly.
If you're buying it through SoFi, it gives you the buy now, pay later. Yeah, it's very interesting.
Yeah,
very interesting.
It's sort of a change in MasterCard's terms of service where they're going, hey, if you're powered with MasterCard, we're going to allow buy now, pay later. Okay. And if you want to sub out of it, then you're going to have to, send us a letter of intent saying, hey, you want out of this deal, not like you don't have to opt into it. You're automatically opted into it. And we'll have to, selectively change out of it, which I'm sure not a lot of merchants will.
One thing I think I like about SoFi and how they're going to be implementing this is is SoFi in the app. Like whenever SoFi Pay M4 comes out, it's not going to just be like, okay, you want to buy this one item online. Here, you can pay this one item over time. What SoFi is going to do is they're going to allow you to open up your phone, type in how much money you want. So I could type in $450, and then I'll click a button, and then I'll add it to my Apple Wallet, and then I can go and scan and spend that $450 wherever I want. Different purchases. I can rack up 10 different purchases, and then by the end of the month, it will stop the $450 and it'll lock it in, and then it will give me my plan. So there's so much like flexibility with this like buy now, pay later solution where it's not just like one product. I can buy like 10 different things at Home Depot, where I can go and do like a whole shopping spree. All you have to do is just enter in your money, and it's just like an instant loan. So I don't know. How can you compete with that? Like that is so like consumer concentric. Like they're SoFi focusing on the consumer and like what they need. I think that's going to be really cool.
Last thing I'll say on that before we can wrap up buy now, pay later is that there's a wider point to be said, or to be highlighted, I guess, on the trust that's being built from SoFi's management to SoFi shareholders and users in terms of the promises that they're making with regards to some of these release dates, because buy now, pay later was promised before the end of the year, options were promised before the end of the year, and now we're just seeing SoFi actually hold true to those dates. And you would think that that's a no-brainer, but it's not. It has to be said because so many of these companies, SoFi included, has been pushing back a lot of their timelines for a lot of these new releases, especially ones that are so monumental as these ones. So I just wanted to bring it up.
I mean, come on.
There you go.
You know,
I want to respond to this comment in the chat as we transition. I legit think SoFi is trash. Like, there's nothing exciting about it. They're just repackaging a better fintech app that most banks already offer. My argument still stands. TD app offers all of this already. They go on to say, and let's not pretend TD can't afford to just make a better fintech app. TD is profitable and shits money already. Why bet on SoFi becoming that? Even at $5, they are trading expensively.
So if I could take this really quick. So first off, one, TD's not offering you 3% interest rates in your savings accounts. They're not. They can afford it, but their dividend would get punished by that. So the funny thing with finance companies is because they're just dealing with percentages of dollars, they can't offer you a better rate, because that means that whether you have $100 million or $100 trillion, if you offer a 1% increase, you're going to be hurt equally. So if they're pricing in a certain payout ratio for their dividend, and then you're saying, oh, well, they're going to be less profitable this quarter because they're going to try to build out this app, and they want to build it out aggressively, so we hired extra engineers to try to get this done, or we acquired a company that's quite similar. Well, that quarter is not going to be a good quarter. And a lot of these investors don't want to see a bad performing quarter. It's honestly a little bit of a problem with public companies, is that they're kind of looked at on an annual or even quarterly basis versus just building out the best product. And I think this is sort of what, I think SoFi's doing, what Tesla did before that, and then what Amazon did before that, is they're going, you know what? We don't care. We're trying to build the best product. Don't worry about the stock-based compensation. Don't worry about all these other things. Let's just build the best product, and the profits will come later. And Chris Hager, the guy that we had on last week, says this all the time. I love it. Unprofitable does not mean uninvestable, right? You're just getting earlier into the business than what would originally already happen. TD at one point, as they were trying to grow the business very quickly, was unprofitable at some point while they were trying to build out their new company. Now that they have the ball rolling, now they actually have something that value investors might want. But it's the same argument that you could say about, why can't a TD bank or any of these fintech companies go after PayPal? Why can't they go after all these other fintech companies that have came before them that are now surpassing them in market cap? Well, because they're not seeing the true picture at the end of the line, or they're realizing that the CEOs here are 75 years old, and they're going, well, for my career, it's not going to be a problem, so I'm not going to have to worry about it. Let's just make sure the dividends keep getting pulled out, and I can make sure my retirement plan is set. They're dinosaurs, man. Dinosaurs.
100%. And also, if you think any bank in America is good at banking, You're wrong. America's like last place in the entire world where banking is like the slowest. It's just the most friction everywhere in the world. Like every other country in the world is doing a better job than America on banking fintech like technology. And SoFi knows this. Like they not Galileo, but Technisys has literally done a ton of banking tech like in South America, and they structured it in a way that they can provide value in the next 20 to 30 years. And that's the reason why we put them under our wing, because they're built in a way that's going to be super relevant here in the near future. All of the tech in America is like super old, and they're all going to be moving off of their platforms here in the next 5 years, 5 to 10 years. It depends on which type of bank and how old your tech is. But yeah, no matter what, SoFi is building the largest net that they can possibly build to capture all the people that are going to be moving into the future of banking technology. And it's going to happen regardless, because if we don't do it, we're going to be left behind in the dirt, and America's going to like be so far behind. And I don't know, there's a ton of regulations right now that are pushing in that general direction towards open banking, and SoFi is just trying to build a big net to capture all those people moving.
And if I could also add, I don't want this. A lot of people are like, why is this our guy here? I mean, like, but honestly, a lot of it is great, right? I want a little bit of pushback. That way I can give an answer to the questions that maybe a lot of people are having, right? And whenever it comes to fintech companies, well, what is the difference between any of these wealth fronts to a Robinhood to, another company that can offer you to buy stocks? It's very, very marginal things, very small details that make these companies very different and attract a lot of users. And in the case of a Square or Block now, right, a Cash App, to a Robinhood, to a SoFi, it's really the fun, cool aspect of this. And I think millennials and Gen Zs especially really aspire to have a banking app that is sort of, not the old Bank of Americas and Chase Banks and such. That's why you see the Cash Apps at the top of the charts all the time on iOS or Google Play stores, is because people want to bank with an app that maybe understands them a little bit better. And personally, like Anthony Noto says, our biggest sort of moat is the fact that we offer everything all under one roof. And Anthony Noto has been saying this. All these CEOs say, oh, well, we're going to be doing that soon. Okay, he goes, yeah, that's been happening for the last 4 years. No one else has been able to replicate it. And the truth is that bank charters are extremely hard to get and supposedly going to be a lot harder going into the future. And the lending platforms are extremely, extremely hard to build out. This is why all of them have these stock brokerage apps, but not a lot of them have lending platforms, because they're very, very hard. But they will soon with Galileo, because that stuff's going to get built out. But yeah.
And Amit, you know this better than anybody. Data is the future, and SoFi is going to be optimized for bringing in the most rich amount of data compared to all these other bank apps that are being structured from the bottom up. Like SoFi is trying to be like as big as platform as possible, and then build on top of it. And we're going to be able to capture so much more data. There's a reason why they're hiring machine data scientists, machine learning for they're hiring data scientists for machine learning on the Relay app. Like you see that they have never taken down that job description.
The job offer.
Yeah.
I mean, data is the future. Data personalization is also the future. And I think I agree a lot with what Tanner is saying. Like the reason TD Bank wouldn't do this is because they should have done this. SoFi shouldn't have even got to this point where they're growing the users and the financial products that they're able to cross-sell and upsell to those users. Like now they're actually creating an integrated ecosystem. It's not the biggest in the world, but the growth rate is pretty phenomenal, and they shouldn't be here. I mean, like any CEO could have seen this writing on the wall 5 years ago when they started to sort of venture into the space, and they just let it happen. And that's probably because during the COVID crisis, to totally reshift JP Morgan, Bank of America, like COVID was actually the best thing, I think, for SoFi, even though the student loans didn't pan out that well, because all the big banks had to make sure that they could protect their bottom line to protect shareholder value. There was no reorganizing of the business to stop this monster that might be glooming in the background. And during that time, SoFi just kept, working harder, kept doing different things. They acquired Galileo in April 2020, and no one really saw that coming. So it would be hard to imagine a TD Bank immediately just does what SoFi does from the data consumer personalization perspective and launches a brand new app inside of them.
And the truth is I think these big banks are pivoting. Like you see branches closing down quarterly. They're not opening up, nearly as much as they used to. They are net decreasing branches. They are going digital, but these are massive cruise ships practically that see the iceberg ahead and are trying to turn, but they have to do it so slowly to not, sort of try
great
to
point.
panic.
Titanic is a great point.
And so really what they should have done is bought SoFi before we even went public back in 2017, back whenever all that controversy was happening with our original CEO. And they didn't. And you don't think a single bank or any of these companies would have wanted to purchase SoFi back then to get what was, 600,000 users up to, 4 or 5 million users that we are today. I don't even remember what we are anymore. It's changing every quarter. I mean, like every company, but still like that growth is worth something. And people want to make it out to be like anyone could do it. No, who even wants 5 million users?
It's the same argument that people are having with regards to like the traditional ICE manufacturers going EV. They have to spend so much to rejig their entire manufacturing process to handle that. And so like TD, has never really felt the need to innovate because their customers have never really seen an alternative.
Yeah.
But SoFi has like that connect. I saw another comment that said like, okay, what does SoFi have that's unique? Well, it's not necessarily the individual streams that are so unique from different competitors. It's the fact that it's all under one roof. And that's the one thing. And the second thing is that Galileo can offer everything that's white labeled. And when you put those things together, that kind of innovation is the reason that SoFi is having that growth. And you got to keep in mind, SoFi is only like under 10 million users right now. I mean, they're like under 5 million users right now, 4.6, right? So they're super, super, super small in the comparison. So when you put all of those things together, I think that TD, like Tanner said, they're just focused on dividends right now because dividends are the only thing that those companies have to compensate for their lack of growth, their lack of innovation in order to keep their shareholders, because shareholders stay for the good dividends because those underlying companies are not growing as fast. They're laggards, right? They're very stagnant. Whereas a company like SoFi, they can command 70% growth rates and they have that innovation. And just a matter of time, I think, before all of those different pieces of their business start to have this like well-oiled machine that the business altogether as a brand will start to see value for users much in advance of what TD has or what JP Morgan has as a standalone product offering because of that connectivity among their streams.
Yeah, we're super early. Like Tanner said in one of his most recent YouTube videos, is like there's going to be a huge partnership with SoFi here in the near future. We don't know, but like they're in the talks with like a big partnership pretty soon, and that would get us on the roadmap. And also like SoFi is like unproven. Everybody knows what they're trying to do, but nobody has like that proven story like Palantir has with Tyson Foods. Like we're not there yet. We need social proof, and we don't have that yet. But all the signs look like it's pointing in that general direction.
Yeah, and if you want to say that there's no innovation, like some are saying in the chat, I mean one guy, but like the idea is like, okay, if we look at a Stripe or a Visa, MasterCard, something like this, where you go, okay, well they already have payment processing, so what is SoFi doing differently, right? Oh, there's other companies that will do banking cores. What are they doing differently? Oh, well, there's other companies that will lend you out money. What are they doing differently? It's like, okay, but those are all separate companies. Those are all different businesses. This is one business that is offering you all those things, and they work together. That's the really exciting part is, okay, we will build you the bank for you. Okay, we'll actually build the software, and then we will offer you the payment processing, everything through the bank, the direct deposits, all the, ACH payments, all of the credit payments, everything. We'll offer all of it to you. And then we'll say, okay, we'll even host the money for you. And then we'll even help you with other things like, setting up other things like buy now, pay later, and other special, unique sort of products that will all be through SoFi. And that is really, really exciting. And no one else does that. That's what we offer that's unique. No one else can offer you all those three things in tandem. And we will give a big discount because we want those clients. And where else are you going to go?
It's a fair point. It's a It's a good point, and no one can offer you that 3.25% interest rate as well. So makes sense. I think now we'll transition. Probably this is our last topic of the day to Robinhood opening up Roth IRAs. Good or bad?
Again with a Robinhood, man. Again,
We gotta
there's
talk
so
about
many
it.
other
We gotta
pieces
talk
of
about
news.
To his credit, I did see a lot of people bring that up. I think we're in this point of just like the macro environment where everybody's just like super depressed about SoFi as a company because they just look at the stock and they want to fire Noto because the stock is down. And then they look at like Robinhood, and Robinhood's offering traditional IRAs, and they feel like, oh shit, competition's catching up. And Robinhood is becoming closer and closer to a one-stop shop. They're offering an IRA. That's going to keep a lot of people on the platform that are not going to switch to SoFi. Technically, I don't know. I think in the long term, SoFi will be able to like flesh out more products. But yeah, I mean, like that has to be some sort of competitive advantage to Robinhood. Like long term, people are not going to want to move the IRA out of there. And if you have your IRA in there, you're probably going to stay for the other type of investing as well.
Yeah, Robinhood offers 3.75, but they also charge you for that. So
Yeah.
if you are holding enough money in that account, then it makes it worth it. But if you're not, then you might as well still stick with SoFi at 3.25, right?
But I'm an ignorant
accounts, right?
retail investor. I don't know that. I see the 3.75 and it looks good.
Yeah, sure. And I mean, but that's fine. That's also because, Robinhood's also very hungry for cash as well. But we could up our rates as well. You know what Robinhood isn't? A chartered bank. Who really has the pricing power here? We do. And matter of fact, every time that you want to tap your Robinhood card and buy something with all that, 3.75 account, you're giving money to SoFi because we actually own the Robinhood card and all the processing behind it.
I wouldn't be surprised if Robinhood tried to get buy now, pay later.
And exactly. And we will absolutely give it to them because we're nice.
I think that's true. And that's sort of the reason. That's why I wanted to bring up this Roth IRA thing. It's not just to praise the Robinhood app, which obviously I love the app, but there's a reason I'm long SoFi and not long Robinhood. It's because whenever I use that interest that I get from the cash that I have in Robinhood to buy something, it's SoFi that gets a little bit of a piece of that. And that's important. That's interesting. And the second thing is Robinhood, even though they're offering a financial product that I really like an IRA, they're not a chartered bank. So it's important for people to remember they make money and they're not going to make that much money off this IRA stuff. They just want to get you into the system so you start trading so they can make more money off payment for order flow. Payment for order flow is a fucking horrible business. It's not a good business at the end of the day. It depends on a bull market because your app is garnered towards retail investors to trade as much as possible. By the way, trade risky options, which is why they keep offering me $25,000 in margin. And I'm like, no, I love you, Robinhood, but I'm not taking that shit because I'm probably going to screw it up. And it's not a good, think about how predatory your business has to be to offer someone who has relatively not that much experience with options, 25,000 for fun. Just because I have a certain amount in your, it's a horrible business. And SoFi is not trying to make billions of dollars off payment for order flow. They're trying to get you into an ecosystem and really be your partner for life to get your money right. That is the bull case for SoFi. Robinhood is not trying to get your money right. They're trying to get you to buy AMC at $4 and then it runs and then they take away the sell. But I love Robinhood, but I'm not long for a reason on that stuff.
Yeah.
So that's the whole thing though. And I think you nailed it, Amit. And that's the piece that makes it predatory is the fact that their business model is incentivized to push you into riskier and riskier trades. Meanwhile, their entire business motto is to have the sort of layman, the first-time investor, the noob who doesn't really know any better, with the confetti on the screen and all that, like the ease of use in their UI. So put those things together, and that's the piece that makes it really predatory.
Well, what I will say, just to play devil's advocate or whatever, SoFi also does, we make our money off the trades based on payment for order flow as well. So we do that as well. So I won't, I don't think SoFi is always the angel here. And I'll also
it's just not the biggest part of the business. That's all.
Yeah.
But you know what's so funny about Robinhood? And I love their app. But I find there's so much, they remind me of Snapchat. And I'm sorry if there's investors here, I'm just not a big fan. But the reason why I don't like Snapchat is the same reason why I don't like Robinhood. They are innovators at heart and they make the best products ever. I truly believe Snapchat is a true innovator. But there's nothing stopping every social media company or every other brokerage to just go, oh, fractional shares. Okay, let's take that. Oh, Roth IRAs offering you 1%. Let's take that. Let's go take one engineer that just made that. Just be like, hey, can you throw the code in here? There's nothing that's proprietary at all. They're innovators at heart, but every other brokerage has taken what they've already done. Same thing with Snapchat, the stories, the invisible text, the maps, everything. It's all gone. So I love Robinhood. I think they're so innovative, but SoFi is going to do everything they're doing. And what? So we have to wait 4 months to get 1% in our Roth IRAs. We're going to come out with retirement accounts 100%. It's going to happen.
Just wait till we're profitable, dude. I feel like we're at the very bottom of this S curve. And once we start having capital behind every little sec of the app, everything's going to just start getting better and better.
Do you know what the revenue growth expected on our financial services is expected to grow between 2022 to 2025?
Enlighten me.
258% compounded annual growth rate
on revenue.
Now, so right now, it is our lowest category at about 11% of our overall business is made up of financial services revenue. That is expected by 2025 to be 30% of our business. Okay, so right now, while we're all doom and glooming about the balance sheet issue, which better happen soon because every quarter that we're waiting, it's less and less of an issue as Galileo expands their business in terms of taking a piece of SoFi's pie, right, being a larger percentage of our revenue, especially as well as our financial services. Right. So the lending issue right now, although I don't even consider it an issue, I think, we have a healthy balance sheet, but it's actually, shrinking in terms of the pie percentage that we're taking up of that amount of, revenue. However, it's still a growing business. It's just not growing nearly as fast as our other two businesses. Right.
Yeah, that's a great point. All right, let's end it off with the Bindable partnership or Bindable. I think I might be saying it wrong, but Riley, you can talk
Bindable.
about that.
Yeah, so Binder 9000 on Reddit earlier today. So Bindable, they released a partnership with Bindable in October, I think October 20th. Basically, this is going to be a white label insurance product that SoFi can implement inside their app, which is really cool. So instead of SoFi offering you an insurance like affiliate programs and making money off of you and sending you outside of the app into your Safari or Google and filling out forms inside of like a third-party website, instead Bindable is going to allow SoFi to for you to like fill out home loans, or no, not home loans, but like home insurance, car insurance, and renter's insurance inside the app. And it's all going to be programmed by SoFi like developers inside the app. And then also SoFi has your data, so they can like already fill your name and all your stuff in. So to get a quote on home insurance, renter's insurance, and car insurance is going to be super quick within the app within like the next 6 months. And the friction to get one of those SoFi products is just going to be cut in half. So this is like exciting. And there is some progress. It looks like they're working on it pretty hard. But it's just very, very fun, like really like short news. There's not a whole lot. That's the long-term goal, and it looks like they're progressing towards that. Go to SoFi stock on Reddit, and you'll be able to see some updates from Binder 9000.
Okay.
Did you guys talk about options last week at all, or no?
Yeah, we did. The conclusion was that it's really good and it's not bad. It's just going to take a while before it gets fully rolled out.
What do you guys think about that? Like, I don't know if you guys talked about when you think it's going to get fully rolled out or what the next phase is going to be, whether it's like sell side or some more complex options contracts, like more different spreads and stuff.
I think both the same person that reached out to Riley saying that there's a rumor that it was going to be released on this Monday. I forget what the actual date was. I think it was November 27th. It actually came out on November 29th. Correct me if my date's wrong, but it was 2 days off. I know that. That same person that said that rumor is now saying that level 1 options are going to come out in January. So if it is that soon, great. I don't even think that's going to really affect anything. But yeah, I just want to see that it's, starting to roll out. For a second there, it almost felt like one of Tesla's products, right? Like, is this thing ever going to come out like the Roadster or something? It's like, all right, maybe it's just a forever product. Who knows?
Yeah. Yeah.
But we have it now. I don't think many people care about just straight calls and puts. But at least now we know it looks great. From what I hear from a lot of people that do options often, is that the actual app looks good, and it hopefully we actually get to.
It has dark mode. It has dark mode. Thank God.
Yeah, getting the important things down.
Yeah, I mean, as important as options is, again, I don't think a lot of people are going to be trading that huge volume of options because they are retail investors, right? Like most of these people. So it's important to have it, and it'll be a nice little small chunk of change when it comes to revenue. But I mean, I was never super excited for options because I'm like, I'm not going to use it.
It's another reason for you not to delete the app and go to somebody else. That's all I care.
Well, I honestly, I think you can hold a single stock for years, right? But then continuously do options like
selling covered
calls
calls
or something like this continuously over and over and over. So that's actually more of a reason to get back into the app and continue to do these options, continue to trade. So I think honestly, for a lot of these long-term traders, options really increase the transactions, right? So like look at Robinhood. That's all retail traders, at least from what I know. And it's all in the options revenue. I mean, the transactions just might be absolutely amazing. And that's all from payment for order flow, by the way. They also offer, $0 contracts, which is what SoFi offers. So hopefully the splits are quite the same, but we just don't have the same literal options that they do. But that'll hopefully come by January.
Monthly active users should go up too. Like if people are going in the app more and more, they might see it or think about a product or cross-selling might be more effective if they're coming into the app a lot more focused on all these options.
Yeah, Rocky Bobby just sort of said my point here, because I'm sure he's not buying and selling his SPY position every month. Maybe he is, maybe he's trading it, but for the most part, people just like to hold that. But he'll sell his covered calls every single month, right? So it's a good way to sort of increase that transaction volume. But then again, it's still a small portion of our revenue. But maybe if you're in the app, maybe we can cross-sell you to another product, and that's where we might get you, right?
I think we'll end the podcast on this comment. So this isn't important at all, but I can't help but notice that Riley has multiple samurai swords scattered across his room. Is this man a cowboy effing ninja? Or Riley, can you explain why you have these swords behind you?
Yeah, damn it, I have another one over there. I swear I'm not a fedora wearing motherfucking ninja like enthusiast.
I feel like you are.
Yeah, that's what we all thought you were. So
I had an idea, and this is going to come off. A lot of people are not going to like this, but I had an idea where somebody that I know in sales sent a fucking sword to one of their clients, and they converted that sale, which was a long process, by sending them a sword. So I had an idea, maybe if I have this person I know that has a CNC machine, we can make like a box for a sword, and we start shipping it to people that are in sales that are working on like high turnover rates, like long, like rollover.
Just get a sword. Make sure that you have like the SoFi blue and white at the like handle, and then send one to Noto with an invitation to be on the pod and see what he says.
Dude, for real.
Like I will protect your honor every week.
Yeah. You gotta put Milady in your thing, like Dex says. I mean, come on.
Yeah. No, it's like I don't know. I'm messing with something. I think I might be trying to send swords to some clients, and then also probably try to do like a little Shopify store, see if something works. It's crazy enough to play around. I want to start doing some sort.
I didn't know you could sell swords like that. Yeah, that's interesting. Yeah. That's super interesting. All right, I think that's it, boys. Tanner, go ahead.
I was just gonna say one of these questions. People said, "Do you know how much SoFi is offering their contracts at?" They're free. It's commission free. It's the contracts are free of charge. We're just going to do payment for order flow, which technically does increase your price, but it's probably at the price that you're buying it at, marginal, non-existent. That's it.
All right. Thank you, everybody. We will see you next week. SoFi Weekly. That's a wrap. 133 people. Appreciate you guys. Check out everyone's channels in the descriptions. Tanner just had a great video that came out about SoFi the other day. So please check that out. I know Tevis just had a video come out as well. And we will see you guys next week.
I don't even have to sell myself out. That was awesome. Bye.
Good. Bye, everybody.
Bye.